The chart of the day is brought to you by Crypto.com, the world's fastest growing crypto app.
It's now time for the chart of the day. And joining us now to discuss what that chart is and explain it all is none other than Katie Stockton, founder and managing partner of Fairlead Strategies. Welcome back, Katie.
Thanks so much. Happy New Year.
Happy New Year to you as well. So the chart of the day that we're going to have is the one that you did of Bitcoin. It's a simple chart of Bitcoin, looking at the moving averages, the 40-day, the 40 and the 10 there. Can you explain what that is? It looks like we're bouncing or hitting a resistance there, if I'm not mistaken. Is that correct?
That's right. So, I mean, what we have still in Bitcoin and other altcoins, we have a downtrend, and it's kind of undeniable. Really, since May or so, we've seen them step lower. Right now, they're kind of on a stair, right? We've seen a bit of a plateau, but these plateaus haven't been ending well. They seem to end with a few days of downside volatility, and then we get into another consolidation phase, the likes of which we've seen really over the past 7 to 8 weeks now. Within that context, with the consolidation phase underway within the downtrend, we've obviously not seen any kind of breakouts above resistance. One way we're gauging resistance is in part based on that 10-week or the 50-day moving average for both Bitcoin and Ether. And those 50-day moving averages, they're a good gauge of the prevailing intermediate term trend, which of course is also lower. Breakout above the 50 days would be an incremental positive, but it wouldn't do much to reverse the long-term downtrend. So we're being very respectful of the longer-term moving averages here, including that 40-week or 200-day moving average, which is still very much pointing lower.
Right. So for the kids at home who want to, put this into one sentence, it looks bad. Is basically, if you were to do three words, it looks bad, and it's the same. Almost looks like the same chart when we look at ETH and XRP. Correct? I mean, they when actually we were putting them together for the screen, it was really hard to tell the difference because they just looked so much alike. Let's call up the one of just ETH against the US dollar. That one there is the Bitcoin against ETH. That's a different one than the one we want. But if we look at the other ones, the ETH against US dollar and XRP or Ripple, as you have it against the US, they like to say it's not Ripple, it's XRP. But they almost look alike. I think here we have, this looks like this might be the ETH chart, but they look so much like no, that's the XRP chart. Looks so much like the Bitcoin chart.
Yeah, I mean, it's a very top-down oriented market right now, and that often happens when you do have a bear market cycle, at least in equities, which we're, of course, more accustomed to over the very long term. But now that we have this sort of bear market cycle underway for cryptocurrencies as well, we are seeing very high correlations from kind of a bottom-up perspective within the cryptocurrency space. So it is hard at times to differentiate the charts when you put them side by side, without any regard to the scale. And they're all, as mentioned before, really stair-stepping lower. So, we are respecting those downtrends. We do suspect that we'll see the consolidation that's underway right now resolve to the downside. And that can be problematic for those that are trying to take counter trend positions. We are not advocating in our research. We publish a weekly note. We're not advocating counter trend exposure, just given the risks inherent, of course, to a bear market cycle, but also the sort of sharp natures of the breakdowns that we've seen. Because it's a bit of a high beta, sort of high risk asset class, unfortunately, the next support levels, which are potential areas of buying pressure, are pretty far below current levels. So even initial support levels are pretty far below. We're watching around 15,600 for Bitcoin. Below that, we're talking about something close to 13,850. And for ETH, we're looking at 1150 as a very minor level below which 1,000 becomes relevant. So you can see that there's a lot of downside even to these initial support levels, and that creates a pretty unfavorable risk-reward profile if you're considering positions in here. For those that still hold positions or are trying to invest for the long term, we're out there kind of with you looking for signs of a long-term bottom, sort of a major low. And we actually do think that this year will capture a major low, but we just don't have indications of it quite yet. We're still seeing these breakdowns. And also, we just don't have the indications from our long-term trend following gauges that we're in the clear yet.
And while they're waiting for the total finish with the breakdown there, even trying to find relative, we actually showed a chart previously. It was the Bitcoin versus ETH. That one looked like it was hard to play as well. It almost looked like it flatlined for quite some time. So there's not even any movement there regarding, or any significant movement at least, anytime soon, correct? I mean, it's sort of like you can't even play Bitcoin versus ETH and try to hope to squeeze some yield out of that.
Yeah, I mean, there's always rotations, right? And we always look at the very short-term rotations more as a gauge as to whether there's sort of risk on coming back into the market, or are we getting back into a risk-off type of environment? And that can then give us clues as to whether we will see consolidation resolved higher or lower. So we do focus a lot on these short-term rotations. You can see them best on a normalized basis, taking all of the altcoins versus Bitcoin as one example. When you compare Bitcoin versus Ether, there is apparently what looks like a long-term base that favors outperformance by Bitcoin. That's not a good thing necessarily for the market, because you would suspect that Bitcoin has a bit more of a sort of defensive property, or is perceived as the safe haven within the broader cryptocurrency market. But as you mentioned, Lawrence, it's a range right now. I mean, you really don't have much of a directional bias to take advantage of at this time. So that makes it even more difficult to take advantage of any kind of opportunities here. Trading ranges, consolidation phases, those are often the hardest things to trade because they just, you can get whipped around and you're not able to take advantage of any kind of established trend.
All right. I was wondering if you could say anything, Katie, about the volumes in terms of institutional and retail activity.
I mean, I don't follow the volumes very closely. We do sense in our own research that there's less of an interest, right? And I just think that's only natural as a byproduct of what we've seen in terms of downside. The good news is that it's more pronounced in other areas of the market, perhaps, like if you look at cannabis stocks as one example. It's just the nature of a bear market cycle where people that were trying to take advantage of, what looked like a sort of parabolic uptrend ahead of this bear market, they've kind of gone away. So we definitely have sensed that. And then, of course, the regulatory environment really hasn't helped at all recently. So I think we've got a ways to go to get to that institutional adoption. We think it will ultimately be there. We don't know exactly what that's going to look like. As a technical analyst, we're focused really just on the price action and trends. But the volumes, we naturally would see them contract not only in a bear market cycle, but also in a consolidation phase. The consolidation phases, like we've seen, which are kind of the choppy sideways action, those reflect an indecisiveness in the marketplace. So it means you have a relative balance between the buyers and the sellers. Yeah. And so we feel that there's some indecisiveness out there right now.